The Reserve Bank Governor, Glenn Stevens, has reiterated that the RBA will do its job on monetary policy settings regardless of the looming general election. At a financial market charity function, Mr Stevens also said that the domestic economy was growing at an estimated trend growth rate of 3.5%. And that means that rates could go up halfway through the campaign. Here's Philip Lasker.
The ground rules haven't changed for the man who put up interest rates on John Howard's watch during the last election.
The board will meet, consider all the issues for the economy and do its job.
Today's appearance didn't change expectations. Some are expecting Glenn Stevens to do to Julia Gillard what he did to John Howard and raise interest rates next month.
He could have talked down the growth story, given that, for instance, spot iron ore prices are down about 30% since they released their last growth forecast. Global bond rates are down about 70 basis points, and of course the share market's off a bit. But he didn't. He referred to strong global growth running around about a 5% pace and remaining around trend, and referred to the strength of the domestic economy, particularly in the labour market.
The Governor attempted to steer clear of any politically charged issues, focusing offshore on the longer-run fallout of the financial crisis. He says shrinking or slow-growing populations in Europe would combine with weak growth, making it difficult for the region to emerge from its debt crisis quickly. And the cost of increased regulation following the financial crisis, with requirements for banks to lower leverage and increase capital, would not be borne by shareholders.
Put simply, it has to mean, I think, that the customers of banks around the world, and especially of the large internationally active banks, will generally be paying more for intermediation services in the form of higher spreads between what banks borrow at and what they lend at. And the reason for that is that capital isn't free.
The results of a stress test for European banks is to be released on Friday, and its implications for global sentiment will be watched carefully by the Reserve Bank. The July Reserve Bank board minutes released today indicate the RBA kept rates on hold pending the results of that test and Australia's June quarter inflation number due next week, which will show a big increase in utility charges, which the Governor argued were inflationary, even though they could be seen as taxes.
It really is inflation, because what we're seeing is, for one reason or another, there's not enough supply capacity to deliver the water, the power and the other things that people desire.
Well, the Governor didn't give too much away, except to say that those increases in utility prices that are adding to inflation can be quite important, in the sense that they might actually let inflation expectations become unanchored.
But there was some weakness in the economy, with Commonwealth Bank figures on credit and debit card transactions for June growing at the slowest pace since the global financial crisis, although the Governor doesn't seem to see a domestic threat at this stage.
The general medium-term picture for Australia is fairly positive, unless the rest of the world really tanks in the near term, or unless something goes wrong with the medium-term China story.
Julia Gillard will soon find out if Australia's fairly positive outlook means higher interest rates and proves a big negative for her outlook.